Okay, I know if y'all watching this channel or y'all watching any other finance channel, it's kind of always the same thing. You should invest, you shouldn't save, you should not use a bank, compounding interest, inflation, dollar cost averaging, all of the normal lingo that you hear on these types of channels. So it is what it is. But with that being said, in this video, I'm going to talk about something that I plan on doing to invest for my children. I know a lot of people invest for their children now on the front end, but it's not only about investing for your children. You could take these jewels and you can use this to invest for yourself, whether you're early in the game, whether you're 40 years old and never started. We're going to talk about how to turn $5 a day into a nice size portfolio so you can have some ends during retirement. So the question is it possible to invest $5 a day and become a millionaire? Let's go ahead, take a look at the numbers. Let's get it. Marcus, debt-free dad, where we're following my family's financial freedom journey, but more importantly, we are going to become first-generation millionaires. Licensed attorney, not your attorney. Legal, financial advice, if that's what you want, go somewhere else. I'm just giving you my opinion, takes, and letting y'all know what's cracking, what's going on in the household of the debt-free dad. $5 a day. $5 a day. Can it build a real investment plan? Let's take a look at the numbers and find out what the truth is. So we're going to take a look from essentially 3 points in life. We're going to look from, hey, if you start investing $5 a day from the age of 20, $5 a day from the age of 30, and $5 a day from the age of 40, and you want to retire at that 65-year-old, 75-year-old, 75. 65, 67-year-old mark. Let's see how that portfolio will look. Let's see how much ends you'll have. Let's go ahead, dive into the app. I'm going to go and pull it up. I'm going to tell y'all know I'm a Financial Peace University graduate, but low-key, I like Dave Ramsey's apps. Dave Ramsey's apps are pretty dope, in my opinion. So that's what we're going to roll with. We're going to roll with the Ramsey Solution Investment Calculator. Let me go ahead and turn on screen record so y'all can see what the boy got cracking on his screen. Okay, so what we got right here on the screen is the investment calculator. So we're going to plug in all the numbers and see what the hell can $5 a day really get you. So, hey, we're going to start out with 20. Let's say you one of them bright-ass people who was a lot smarter than I was, who started investing early. We're going to look at age 20. You retire at 67. Let's go and bump that down to 65. You want a couple of years to be able to shave off. So we're going to push it. We're going to look at age 20 to 65. About how much do you currently have in investment? Because we're just starting out, we're going to put zero, absolutely nothing in there. Now, how much will you be investing monthly? You can see I already got it plugged in. $5 a day, $35 a week, $40 a month. Let's go ahead, plug that in. And what do you think your average rate of return will be? Well, over the past, 7 to 10 years, about 10% on average return has been the average for the market. But let's play it a little bit cautious. Let's not go for 10% return. We're going to go with somewhere in the middle, more consistent with what the long-term average is. We're going to take a look at if it was 7.9% return. So a 7.9% return. Let's go ahead and plug those numbers in. 7.9% return. Let's take a look at what we got. So from age 20 to 65, if you contribute $140 a month, that's $5 a day, your portfolio would be at about $714,000. That's pretty damn impressive. So we're going to scroll down here. Let's take a look at it. Your initial balance was zero. Your contributions was $75,000. Look at the growth. $638,000. Over $638,000 is growth. That's 89% of your total portfolio. So let's kind of scroll up. Let's go ahead and right now, let's play with the numbers a little bit. Let's move it from 65. Let's go ahead and put it at 67, the average retirement age, or the age you can retire with full benefits. And what we're going to do now is we're going to adjust. Let's say that We don't get 10%, but let's say on average we get 8.2%. Let's go ahead and put that in, and we're going to take a look to see how the numbers play out. Okay, an extra 2 years from 20 to age 67, $140 a month with the 8.2% return. It'll almost have you at millionaire status by the time you retire. You're looking at $933,000 in your overall investment portfolio. Now, let's put this into complex. Now, let's put this into context. I said complex. I'm bugging. When we put this into context, we're just assuming that all you're doing is $140 a month. We're not accounting for any raises that you may get. We're not accounting for any promotions. We're not accounting for any bonuses that you may get. So at a bare minimum, $5 a day from 20 to age 67 with about an 8.2% return will almost have you at millionaire status. Now, I know a lot of y'all watching this video, y'all probably younger than me, but older than 20. So let's take a look at the numbers. We're going to go ahead and change one number. We're going to change one number. We're going to put it at 30. Let's go ahead and put it at age 30. Same numbers. Age 30, retiring at 67, $140 a month, 8.2% return. Let's take a look and see what the total will be when we retire. Okay, if we wait 10 years because you started a little slow, at age 30, from 30 to 67, we talking 37 years, you will have $400,000 in your investment portfolio. When we break it down and look at the numbers, hey, it's still amazing growth. Your total contributions would be $62,160, and the overall growth would be $338,000. So almost 84% of your overall portfolio will be from growth, from compounding interest going to work. So let's take a look at this. What if you add an additional $100 a month? You would have $241,000 of additional growth from an additional $100 a month. I mean, just look at this. If you gave up a daily cup of coffee, and coffee high as hell, you're talking $5 a day. That's the same as what your investment. That would put an additional $309,000 worth of growth in. $200 a month if you stop eating out. I mean, I love this calculator because it gives you the what ifs and it allows you to see, hey, if you put in some additional effort, you can become a full-blown, you could be well above millionaire status. I mean, and that's just kind of crazy. So now what we're going to do is we're going to take a look at age 40. People age 40, if you invested and actually have $0 in an investment account for retirement, same deal, 5 bones a day, $140 a month, 8.2% interest. Let's take a look and see where it'll play out. So from the age 40 to age 67, you would have $165,000 in your investment account. So contributions of $45,000, $120,000 worth of growth. So 73% of the overall portfolio that you would have would be from compounding interest. Again, an additional $100 can get you to an extra $85,000 of growth. An additional $128 a month will get you an additional $109,000 of growth. So I think that this is great because it actually kind of puts some things into context. Let's jump out of here real quick. Because it actually puts things into context. We always hear about, oh, it just takes a little bit. So let's look at the basic, $5 a day. $5 a day, if done right, if you have an average or slightly above average return and you start in your 20s, it can actually get you to full-blown millionaire status. Now, before I even wrap up this video, I say this all the time. You having a comfortable retirement don't have shit to do with you being a millionaire. You cannot be a millionaire and still have a comfortable retirement. You can retire and have a home that's paid for, have a car that's paid for. Don't owe nobody anything. Let's just think about it. If you retire at the age of 65 and your home is paid for and your car is paid for, no house note, no car note, you just pay taxes and utilities and you don't owe anybody anything, and you got $300,000-$400,000 in an investment account, hey, you're going to be set. You know, I mean, yeah, Social Security is here, it's around. I don't know how long it's going to be in the game. Y'all let me know. Do y'all think Social Security is going to be around by the time you retire? See, right now, I say no. For me, I don't think so. Now, when I hit 55, I'm expecting my damn Social Security, and if I don't get my Social Security, I'm voting somebody out of office. So that's why I think the Social Security situation will ultimately render itself, even if it comes at taxing, providing additional taxes, because you don't want to be the party who gets rid of Social Security. But this video just goes to show that $5 a day can get you a long way. Your retirement doesn't have to mean that you're a millionaire. Your retirement is about being comfortable. Your retirement is about being content. Your retirement is about being able to enjoy and not be stressed. What gives you peace of mind? Where do you need to be to have peace of mind? Now, to get that peace of mind, is there some financial goals that you can hit? Yeah. But it doesn't require you to be a millionaire. You just have to understand what you want, set your goal to what you want, and be realistic about the expectations of what you can get. So the bottom line is, yo, $5 a day. $5 a day is less than Starbucks. I go to Starbucks some morning and pick up that shit, pick up coffee for the wifey, and it's way more than $5 a day. So $5 a day can definitely, change your life when you look at compounded interest and time. So even if you're 40, 50, it's not too late to do something. And like I said, these calculations didn't even take into account promotions, bonuses, when you pay off debt and you're able to take that money that you're applying to debt to invest more. So you have a lot of room and potential for growth. That's it. I hope this video helped to just provide some perspective on how compound interest is your biggest friend. Compound interest, time, and getting started sooner than later. And sooner could be today. It's not about your age. If you 40, 50, you can start making adjustments and making plans now. Y'all take care. Check out the video on the screen. Make sure y'all like, share, comment, all that good stuff. I love y'all. Peace.